Now, to further discuss the results of the G20 finance meeting and the ongoing trade war and currency war we're in the midst of, we have with us Professor Shin Sang-hyup from Kyunghee University. Thank you for joining us today.
It's a pleasure to be here.
Now, what was not really highlighted in that report was the differences that were not narrowed between the leaders of the G20 there. For example, the joint statement didn't really address, have an action plan in place. The US and China didn't really talk as much. And the EU also, on top of it, called a tax on digital companies, which actually mostly attacks American firms like Google and Amazon and Facebook and the like. I mean, they still are not sorted out there. Can we conclude that this G20 meeting, didn't really have the results that we wanted it to?
No, I think they failed to produce very fruitful outcomes. As we heard just before from the reports, well, the finance ministers of major economies get together and they discuss about the seriousness of the trade war, which is, which was started by the USA, and the China and the European Union took the retaliatory action against the USA measures. So we are at the trade war. And everybody recognized that it is not good for global economy and then their own national economy, but they failed to find a solution to the protectionism and protectionist trade environments. On the top of that, we can find the big gap on the stance between USA and the other member countries. USA said that this is your problem, and that is not the USA problem. But the other member countries empathize that this is the problem, of the USA government, not ours. So I think they failed to take the first step to find a solution to this problem. And another one is that even the USA Treasury Secretary Mnuchin emphasized the follow-up measures which USA government will take. That is the so-called currency war, possible currency war. He even mentioned that the Chinese government and European Union member governments are right now manipulating the currency value of their currency values to bolster their trade. I think this is kind of some warning about the currency war between USA and the other major economies. I think on the top of the very protectionistic trade environment, if major economies started to take the very protective, the financial currency, start the currency wars, I think the global economy will be in a really, really serious problems. So I think I want to concern about this point.
You mentioned the currency war there. Mnuchin also said on Friday that the US would be keeping a close eye on China about currency manipulation.
Right.
Trump has, of course, accused China in the past, and very recently, of China manipulating currency. But, of course, Chinese government have said, they're not involved. They're just saying it's the markets. What do you see in the current the exchange rates and fluctuations that are happening between the US and China?
Yes, that's a very important question. I think the currency value is very important in the trade because, according to the USA government, the Chinese government and the European government are trying to manipulate the currencies of their currencies to minimize the impact caused by the USA government's very protectionist trade policy. Because as we know very well, USA government decided to impose 25% tariffs on the imported, the steel products and imported from the European Union member countries and China. And then in response to such a very protectionist USA trade policy, European Union and China also took the retaliatory action. And then when on the part of China and the European Union, if they depreciate their currencies against the USA dollar, they could minimize the negative impact caused by the very protectionistic USA trade policy. So trade policy, protectionist trade policy and the currency policy should be interrelated very directly. In this context, what I want to say is that, we have to review the Chinese yuan's currency and yuan's value against the USA dollar over the last 2 years.
I mean, if we look at the graphic just right now, you can see that there's been a big dip down and a big dip up against the US dollar and the Chinese yuan renminbi.
Right. But the point is that, since the mid-June, Chinese yuan was depreciated about 5%. So Chinese government emphasized this one. Look, we are making efforts, right? And also even Chinese government emphasized that they do not intervene in the financial market. They do rely on the market itself. But this is really different from the USA's insist. USA said that, as I already explained, that to minimize the negative impact caused by protectionist USA trade policy, Chinese government directly intervened in the financial market, to depreciate the currency value against the USA dollar. But the USA government emphasized, look, from since our June 2017, actually Chinese yuan's currency against USA dollar was going up, appreciated. So there are some differences on the stance of these two governments, but certainly we have to wait and see. But Chinese government emphasized that look at the current exchange rates between two major currencies. And European Union also emphasized that, we do not manipulate, they said they did not manipulate their, euro value against the USA dollar. But USA government emphasized that, no, you guys have, appreciate the currency value against the USA dollar. Depreciate your currency against the USA dollar. Because strong USA dollars certainly is a negative factor for the USA exports.
Let's look at Trump and the US reaction to this. Trump last week, he criticized the Fed for raising interest rates. Now let's put aside the fact that he broke with decades of tradition of the US presidents not getting involved with interest rates and the like. But his comments, it seemed to be centered around the fact that his concern was that when rate hikes go up, that they will be strengthening the dollar, and that will therefore cause the trade deficit to rise. Now this has direct implications to the trade with China and the currency concerns. Does his concerns hold water?
Well, before answering your question, I want to pinpoint this point. That is that, if Federal Reserve lose the credibility in the market, it could be more a serious situation. We can see the more serious situation. That means that the Federal Reserve has their own voice in the decision-making procedure. In selecting their, in deciding their interest rates, something like that. But this time, well, as you mentioned, Mr. Trump emphasized that. He criticized the Federal Reserve decision. On the part of the Federal Reserve, it's going to be very, not easy for them to respond. Because that if they change, accept Mr. Trump's suggestion, that is the way, very difficult for them to keep their credibility in the market. So in the coming era, they will have serious difficulties in implementing new financial policy. But if they say no, they could not avoid some conflict with the USA president. So certainly it is not an easy question for the Federal Reserve. But I think that, according to the economic principle, for the time being, Federal Reserve cannot support Mr. Trump's policy, because there must be the deflation and inflation risks when the support for the Mr. Trump's policy, to depreciate the USA dollar's value against the major currencies such as Chinese yuan and European euro. Because when they do that for the time being, it can be a very positive factor on the USA economy. But there must be very skillful consideration. Otherwise, they will face the inflation or the deflation risks. That means U.S. economy can be slowed down. As it was about 2 years ago.
Let's look a little bit at history, actually. So, as I understand it, the trade wars inevitably have lead to currency wars. It seems that way. And in the past, we've seen a trade war before in the 1980s with the U.S. and Japan. Can you explain about what happened there and how that compares to the situation right now with China?
Yeah, at the time there was G5 meeting, at the USA, UK, France, Germany, and then the Japan. At the time, the USA dollars, the currency value, USA dollar value was appreciated too much, about 50% more than the other major currency value. That means that USA economy got a huge burden in their economy itself. So at the time, the USA government emphasized that it should be corrected. And then the other four major economies accepted the USA proposal. Then the Japan and the UK, Germany, and then France, they devalued their currencies. Let me give you an example. Japan, at the time in 1985, one USA dollar was equivalent to 260 yen. But after 2 years, 1987, the Japanese, one USA dollar was equivalent to only 130 yen. So the Japanese, the currency was depreciated. Appreciated a lot. And then as a result of those policies, Japanese economy started to be slowed down because the Japanese exports lost their competitive advantages in the global market. And then after that one, there was so-called bubble economy for 20 years. So we said that we call it lost 20 years in Japanese economy, right? And so right now, the Chinese government is in the same place to the Japanese or other the four major economies participating at G5 meeting. So I think the Chinese government got some lesson from this experience. So I think that Chinese government will not take the same stance to the four major economies in 1985.
And finally, very briefly, we don't have a lot of time left, but South Korea. Amidst all this, how does this all affect South Korea, and what does South Korea need to do to try and minimize any damage to its own economy?
It's a very difficult question, but I think, USA, Treasury Secretary even said that China will be on the list of the country currency manipulator. And then to make such a kind of decision, Korea could be on the list as well to divert the criticism from the China, because the USA government is targeted China and some other major economies. So we have to make every effort prevent us from being on the list. We have to use all channels to persuade the USA government and USA policymakers. At the same time, at firm level and the government level, we have to prepare for some negative outcomes caused by the currency war. Because that if currency war take place, then our financial market, including stock market and then the financial sector as a whole, will face serious challenges. Then amid very protectionist trade environments, it can be a fatal blow against Korean economy. So I think it's not easy though, but we have to make every effort to prepare for the serious the conditions caused by the trade war and the currency war.
Yes, concerning times. Thank you for your time. We've run out of time, so thank you for coming in today and sharing us your insights.
My pleasure.